Hi, I'm Brendan Mills from CFO Dynamics, and in today's video I want to take you through how perpetual stock should work in MYOB Exo. So in accounting there's two different ways you can account for stock, periodic or perpetual. Periodic is pretty straightforward where you have an opening balance, you add all your purchases together and then you should subtract away your closing stock balance, which will give you cost of sales for that period. The problem with that is you don't have a running value of what your stock is on your balance sheet at any point in time, and often relies on stock takes and those kind of processes. But with the power of MYOB Exo, what you can do is have your stock running on a perpetual basis. So you constantly have a value for what your stock is, how much you have, and the value of that total stock in the system, which sounds perfect in practice, but can often be very challenging to put into real life and make it to work. So what I want to take you through today is, I suppose, a perfect example of how the stock should work in the system, because you'll find different areas that will get thrown off, and in other videos I'll show you how those areas do get thrown off. But today I want to show you how it should work in a perfect scenario just by doing a single transaction, or work with a single stock item through a series of transactions. So first of all, what we're going to do is we're going to create a brand new stock code. And there are other videos where we will take you through these processes in more detail. But particularly here, I just want to show you how stock from a perpetual basis works. So I've just created a brand new stock code and we're going to raise a purchase order for that item. So get it from a supplier and let's get it from here, and it's going to be black tire. So we're going to say that they are $100 each and we're going to purchase 20 of them. So $100 per tire, $20, $2,000 will be the cost of that item. Now, normally we wouldn't do this in practice where you raise a PO, receipt it, and cost it all in one go and raise the invoice, but just for this example today, we're going to receipt all of them, move them through to the costing phase, and do this in a very simple fashion. Where we're going to say $100 per unit, as we've got there. And last of all, we're going to raise the invoice. And we're going to save that in there. So we've completed that transaction. And if I go into the stock item for the black tire, I can see that this now has $100 in there as the average and last cost for that unit. Now we're going to go and sell that. So just before we do, we've completed the task of creating the PO, receipting the goods, costing the goods, and creating creditor invoice. So we've done all that in the order that it should be completed in. There are other ways you can still do it correctly, which I'll share with you in other videos. But just for simplicity for today, we've gone through those steps. Now we're going to go and sell. Let's say we're going to sell all 10 of them. Sorry, I think we purchased 20 of them. So let's say we're going to purchase all 20 of them. Sell all 20 of them. Must be a Monday here. So we've got the black tires, and as you can see down here, we've got 20 in stock. So we're going to sell all 20 of them, and we're going to sell them at a price of $200 per unit. So $4,000 will be the price. And what we're going to do in this case is just do a quick supply all picked, invoiced all supplied, post the stock movements, post the invoice, and I'm going to untick printing the tax invoice. So we're going to complete all those transactions and then add $9 worth of freight. It's a pretty good deal for 20 tires, $9 worth of freight. Now, this part here is the most important part, showing you what those transactions mean from a general ledger process perspective. So if I go in here and do a new GL post run for all transactions that are outstanding, the order in which these transactions come through is not necessarily the order they happen in real life, because you can see here we've got the sales first. So I'm actually going to work from bottom to top. So the first transaction that happens here is we're going to increase the value of our stock on hand by $2,000. So this happens during the receipting and costing phase, where we're putting into stock the value of $2,000 before we get the creditor invoice. And that goes to our stock clearing account, which is in credit. So as the name suggests with stock clearing, which is on the balance sheet, is that amount should actually clear out with a corresponding debit in the next transaction, which if you look above, it does. Now, there's two reasons generally why stock clearing never actually reaches zero in your system's accounts. One is practical and one is because the system isn't being followed properly. The practical reason is it's almost impossible to have all your stock cleared at any one point in time and all the transactions be up to date, just by nature of day-to-day business. So it is not unusual to have a balance in stock clearing. Where the problem comes in is where the balance starts to get what we'd consider like out of alignment with what your stock valuation should be. So I would say if your stock clearing value starts to get above 2.5% of what your stock value in your system is, there might be a reason for that, but I would say it needs to be investigated and understood as to why that is actually occurring at any one point in time. Because as you can see here, what should happen is once you do the costing and the receipting of a good, or the receipting and costing of a good, is once you put the creditor invoice through, the two should actually match, because stock clearing, $2,000 debit here, $2,000 credit here. So the stock clearing account goes out to nil. The other side of it goes to the trade creditors account. So that brings that balance into line as to what we owe our suppliers, plus the GST, which is associated with it. So just one last time, we now have the value of the stock in the system. We now have the value of what we owe the supplier in the system, and the stock clearing has nilled each other out, with the difference being our GST asset in this case for the GST paid. So making sure your stock clearing matches is crucially important. Now, if I move up here into my sales transactions, we'll start with the top transaction first, because this is the easiest one to deal with. It's a matter of the sale being the goods, plus your service, which is your freight, your debtors control being the client that owes us the money, and the GST collected being the difference of those two amounts up there with the debtors control, which is fine. The most important for these two transactions is the cost of goods sold. So what we're saying in here is the value of that stock is those 20 items at $100 per item is worth $2,000. So we're reducing our stock by $2,000 and we're increasing our cost of goods sold by $2,000. The problem is though, is that as soon as someone makes an adjustment to the average cost of goods within the system of that item, you're now no longer taking enough out of stock on hand, and you could be, or might not be taking enough, you might be taking too much or not enough out of inventory as a result of that. So you've got to make sure that these items here, the cost of goods sold, is relevant for the items that have been purchased down here. It doesn't mean they have to match perfectly, but they have to be a fair representation, because otherwise you're either going to be understating your stock and overvaluing or overcosting the items, or conversely, you're going to be overvaluing your stock and understating the costs of which you're selling the item. That's crucially important. But as you can see here in a vacuum, when you follow a single transaction from start to end, the numbers should cross each other out and nil each other out, and then you have your profit on that item at the very end, 4,000 less than 2,000. If you'd like more details on this, please let us know. We'd be happy to walk through it with you in your system specifically, because this here, if you can get this process working correctly, it's the massive difference between success and failure with your Exo system. Also, if there's any other topics you would like to see a video on, please let us know, and we'll be sure to add them to the website. And I hope you enjoyed this.